Is China's electric vehicle industry entering a deeper crisis? EV production and market boom, 2018 to 2023. China's annual new energy vehicle (NEV) sales, including battery electric and plug-in hybrids, jumped from around 1.3 million in 2018 to 9.5 million in 2023, nearly an eightfold increase in 5 years. This explosive growth was driven by strong government incentives, a wide variety of affordable models, and growing consumer demand. By 2023, nearly 30% of all cars sold in China were electric or hybrid, a sharp rise from just 5% in 2018. China also produced 58% of the world's EVs, firmly securing its place as the global EV leader. Rapid expansion of state-backed factories also fueled the growth of the EV supply chain. But the question now is, can this growth continue sustainably? Fierce price wars and shrinking profit margins. With dozens of EV brands in fierce competition, a massive price war has broken out, severely pressuring profit margins. Tesla kicked it off in late 2022 by slashing Model 3 prices by 14,000 yen, $1,930, forcing Chinese automakers to follow suit. BYD, for example, cut prices on over 20 models by 10 to 34%. Its budget Seagull EV dropped from around $10,000 to just $7,765. These discounts benefited consumers short-term but severely cut automaker profits. Tesla's global profit margins shrank. Its operating profits dropped 40% by mid-2024. In China, some Tesla models were sold at break-even or even at a loss. Meanwhile, startups like NIO and XPeng reported massive losses in 2023. NIO, 22.7 billion yen, $3 billion. XPeng, 10.4 billion yen, $1.5 billion. Even BYD, while still profitable, faces questions over how long it can sustain aggressive pricing. BYD's debt and financial risks. BYD, which produces nearly 30% of China's EVs, also plans to invest $1 billion in Turkey. But is its financial structure as strong as its market share? Officially, BYD reported 27.7 billion yen in debt by mid-2023. But independent researchers like GMT Research estimate the true figure, including supplier debt and off-balance sheet liabilities, could be as high as 323 billion yen, $47.5 billion. If market conditions worsen, BYD's hidden debt and reliance on short-term financing could pose serious liquidity risks, despite strong ties with state banks. How consumers are feeling the effects. Lower prices have made EVs more accessible to Chinese consumers, with entry-level models now selling for 55,000 to 70,000 yen, under $10,000. But the rapid discounts also hurt consumer confidence. Buyers who purchased early saw their cars lose value within months. One 22-year-old bought a BYD Qin Plus for 94,800 yen, only to see its price drop 15,000 yen just 4 months later. Reactions on social media were swift and angry. Buyers of smaller brands also fear those companies might collapse, leaving them without service or updates. Some dealerships have even labeled new EVs as used to get around pricing controls, further confusing the market. The EV bubble and a market reckoning. As profit margins shrink and debt rises, experts warn that China's EV market may be forming a bubble, similar to what happened in the real estate sector. XPeng's CEO called 2025 a survival year. NIO's CEO said it's time to face harsh realities. Great Wall Motors chairman compared the current EV market to the Evergrande real estate collapse. By 2023, 80% of EV sales came from just 30 brands, suggesting that many of China's 100-plus EV companies may soon disappear. Some parts suppliers are already shutting down due to overcapacity and debt. Government support and regulation. The Chinese government has played a major role in building the EV boom. By the end of 2022, it had provided over 200 billion yen in subsidies. In 2023, it launched a massive 520 billion yen tax break package to continue supporting EV purchases through 2027. However, Beijing is now taking a more cautious approach. In July 2024, the Politburo said it would target destructive competition and allow underperforming companies to exit the market. Meanwhile, global trade pressure is growing. The European Union has launched anti-dumping investigations and imposed temporary tariffs on Chinese EV imports, putting overseas expansion at risk. Final thoughts: a critical crossroads. After years of rapid expansion, China's EV industry is at a turning point. Surging production, price wars, and growing debt have exposed serious structural issues. The next 1 to 2 years will determine whether the sector can stabilize or spiral into deeper crisis. The 2023 Evergrande collapse was a stark reminder of what happens when unchecked debt growth bursts. A similar scenario in the EV market could have economic and social consequences. That's why the future of China's EV sector matters, not just economically, but socially. What happens next will shape not only China's green transition, but also the global electric vehicle industry.